are those people. So thank you for joining in tonight. I know it's 9:30 p.m. Eastern Standard Time. This is late as hell for many people. For me, it's very late. I don't operate well after 8 p.m. But I don't mind a couple late night sessions. Always is fun to do. And yeah, I mean, the game plan today is to cover some really interesting stuff. You were going to cover price action analysis, which doesn't sound interesting, but trust me, it is really interesting. It's so much better than like those risk management classes and stuff like that. There's a lot of value here. I'm telling you guys, there's a lot of value. I don't hold anything back when I go over this type of stuff. This is the type of stuff that you will spend $1,000 on and pay for, some sort of crazy course or something like that. This is that type of stuff here for you guys. So it's going to be a very good session. We're going to cover price action. We're not going to cover price action analysis in its full depth, but we're going to cover candlestick analysis and how to really read it. And then we have in stock for today is going to start over here. And you can see I didn't finish my little third point here, but I have this video. I'm going to trade Zella at the end, trade Zella example, just so I don't trip over at that last point. But yeah, so it's an exciting lesson, and we're gonna jump right into it in 1 second. Hopefully I can go in and click on this and I can actually edit this. But these are all the classes we've had so far doing this with Honeydrip. We started off about 5 months ago doing these monthly classes. I've done one class every month for the last 6 months. This is my sixth class I've done. Many of you guys have been to, I assume, multiple of these classes, or some of you guys are new to these classes. I'm curious in the chat. Is this the first class you guys have ever come to in Honeydrip, or have you guys come to other classes? This is your first time, or have you been to other sessions previous? Second time? Been to them all? Just joined today. First time. Okay. So introduction about myself, because I know many of you guys are first time to this class. So me and the 5 other admins in the chat, we all try to do little classes when we can. And the reason why we do this is because we don't want you guys to just take the signals that we give out, take the trades we give out, and then you walk away with it. Maybe you make money, maybe you lose money, and then everyone's smiling, right? That's how most chats are. We don't want to be like that. We want to make it so you guys are learning with us. I was a paying member of this chat, just like you guys. I started off about 4 years ago in the chat. I started trading 5 years ago. My first year, I was red in the chat, right? First year, I was red in the chat. By my second year, I was barely break even. I made a little bit of money. I think I was just over 4 figures. By my third, fourth, and obviously now my fifth year, I've now gotten to the point where I'm multiple 6 figures, not 7 figures yet, but I've gone really, really far. And the reason why I've gone really far, and I'm very transparent about this, is because I learned from other profitable traders. It really is as simple as that. You find other profitable traders that have a system that works, and you try to mimic what they would do, right? And that's all this is, right? That's why we do these type of classes, is because we're going to show you what we do on a daily basis, so that you don't have to be reliant on signals, right? You can take your own trades. And yes, you can be in the chat. Many people in the chat who are in the chat right now are already at that 6-figure range, are already very, very established in their trading career, and they're just in the chat for the community portion, right? And that's what many people are. But many people are also still learning, and that's why we do these classes, is so you guys can still learn. So game plan for today is to read candlesticks like a book, right? Every chart that we go over, every chart that I'm seeing is like a book. And the way I like to look at everything, my whole mindset changed after somebody told me this. I can't remember who told me this, but it was another very successful trader. I can't remember who it was, but they told me, if you're taking a breakout or a break and retest or a continuation play, right? And you kind of have to view it like, and I say this all the time to people I'm teaching, to mentees, it's all the same thing. Every trade you take, every chart you see, you have to be sold into that position. And I know I said this a million times over, but it's kind of like walking into a Kia dealership, right? Or any car dealership. You go to a car dealership and you walk into the room, and the salesman looks up at you and kind of just doesn't pay you much attention, right? You're very unlikely to buy a car. But if the salesman comes up and is wearing like a spiffy, nice collared shirt, walks up to you and says, "Hey, very excited to show you the car," you're more likely to buy that car, right? Because just the first interaction of that chart, the first view of that chart, and how it's approaching over that breakout, it's going to tell you everything. The first 30 seconds of that breakout, it's going to tell you almost everything you need to know. And the game plan today is we're going to go over some chart. We're going to go over some candles and what they mean, and I'll tell you what it means, and how I view it. But we're also going to jump ahead and we're going to show you guys stuff that like some people don't even show this type of stuff, which I think is pretty crazy. But we're going to show real examples of charts, right? In real time from trades that actually we've taken on Honey Drip Voice. So I have two different videos and one trade that I'm going to show you. So about three different examples that I'm going to show you. I'm going to walk through what each candle means to me and how I view it. And some things might be different. Like I know many of you guys have your own view of candlestick analysis and price action analysis. And hey, that's great because we're all gonna have different views. I'm gonna show you my view. My view has made me a lot of money. Maybe something that I do will help you. Maybe it won't, right? And that's okay. And that's why it's okay to learn different strategies. But I think it's still very important to keep your ears open and your eyes open, because you might learn something new tonight. So game plan today is to go. I'm talking way too much. Introduction. Go over everything you need to know about candlestick analysis. That's the game plan for today. We're going to go over which charting platform you use. The charting platform is TradingView TV, or TOS Thinkorswim, or it's going to be Webull. Those are the three that I recommend. There are no other ones that I recommend besides these three charting platforms. I'm just going to answer that right off the bat. TradingView, Thinkorswim, or Webull. Very simple, very basic. Don't want to talk about anything more than that. The type of candles we use, I'm going to show you that on TradingView in a second. And then we're going to go over candlestick basics and the live action of these charts. We're really going to just skip through this stuff. I mean, I'll show you the candles we use, but that's so basic where I feel like many of you guys already know that. It would almost be too elementary to spend too much time on this. So I'm going to go over to 3 and 4, and that's the basis of today is going to be on candlestick basics, then live analysis of these charts, so you guys can get a better view. I know I'm going way too much introduction here, but I think people oftentimes, here's the issue, right? You learn a strategy, and the strategy can be great, right? It can be like maybe your sole strategy is you take opening bell breakouts, right? Or you take VWAP bounces, or you take 34 EMA bounces, or maybe your strategy is you take 50 EMA bounces, or maybe your strategy is you catch intraday reversals, or whatever your strategy is. You're going to realize that there is a discretionary component of trading, and that comes down to two things, right? It comes down to risk management, which we all talk about, how you manage your money, right? I can have a $100,000 account and take $1,000 loss, but somebody who has a $10,000 account takes $1,000 loss. It's a much worse situation, right? How you manage risk is going to be very important. That's the first discretionary component of trading. The second discretionary component of trading is price action, right? How you read price action. You can trade. You and I can trade the same exact strategy, but I may not get into that trade because I don't like that price action. And it all comes down to walking into that dealership. If I walk into that dealership and the guy is being a pain in the ass, is not showing me the car, or he's sitting down and is drinking his coffee and not getting up or something, whatever it may be, and that pisses me off, I may not buy that car, just like I may not buy that position on Tesla longs over 238, right? There are certain components of trading that are discretionary. And that is why not everything can be just thrown into an algorithm, right? Because think of it this way. This is super important. If everything was so simple, where every 34 EMA bounce, or every VWAP bounce, or if there was some sort of statistical, benefit to one of those strategies working always and always and always with no discretionary components, then an algorithm would be coded, right? a very simple algo would be coded, and it would make a shit ton of money, and somebody would be a multi-trillionaire, which is not the case, right? Obviously, there are some algos that work, right, and people use them, and they're proprietary oftentimes. But the best part about trading, right, the things that can't be done through AI, right, come down to risk management and price action analysis. I've done a class on price action analysis in Honey Drip. I've done one of these before, but I haven't done one where we go through live examples, and I haven't spent enough time on candlestick basics. So without further ado, are you guys ready to jump right into it? Are you guys ready? I'll make sure everyone's kind of has a good understanding. We have about 500 people of you guys in the Zoom right now, which I'm really surprised. It's almost 10 o'clock. I'm surprised we have a lot of people in here. All right, cool. Awesome. All right, let's get into it. So this is the first component of candlestick analysis I want you guys to look at first. And this is actually a complete joke. Everything you're seeing here, all these words are nonsense, are meaningless, and mean nothing to me. This is a joke. This means nothing, right? Take it and throw it out the nearest window. Anybody says, is there a white Maribozo? It means nothing to me, right? It means nothing to me. Everything here means nothing to me. Now, granted, if it works for you, that's totally fine, right? That's totally fine. But for me, I don't know what a black paper umbrella is. I don't know what that is. I have no idea what it is. But I can tell you what a bullish or bearish candle looks like, and how I do that is by looking at this chart ahead of us. So this is the introduction. Candlestick analysis. The first component of candlestick analysis is understanding what the hell a candle even is. A candle is just a certain time period, right? So every candle is one period of time. It could be 1 minute, it could be 5 minute, it could be 60 minutes, which is an hour, it could be 4 hours, it could be a daily time, a daily candle. And all it does is it shows us the fluctuation in price over a period of time, right? So if you have a line chart, right? If you have a line chart on SPY, right? This is a line chart on SPY. Well, if the price action looked like this, right, then the candle is going to look like this, right? The candle is going to look something like that, right? Where you have it's opening over here, and maybe it closes over here, it closes over there, right? So that's all a candle. A candle is just basically showing the price change over a period of time. A better example would be like this. So let's just say you have this is a chart, right? This is the chart of gold, right? This would be time, right? Time in seconds. This would be time in seconds, and this would be price. Well, if the price of gold, let's just say was $100 per gram, right? $100 per gram at 931. At 932, it's 120. At 933, it's 140, right? Well, the candle would then look like this. It opened like this. It opened over here, and it closed over here, right? That would be the candle, right? That's all the candle is. Now, let's just say it looked different. Let's just say it looked a little bit funky. Let's just say something like this happened. Let's say maybe the price of that gold pulled back to 100, right back to its opening price. Well, what would that look like? Well, that would look like this. It would have opened over here. It would have pushed as high as here, right? But then it would have come all the way back down right to its opening price and closed right there. Meaning this would be what we would know as a bearish reversal candle, right? A pin bar candle, right? That is all a candle is, just showing us the interaction of price over a period of time. And that is why I don't like to label my candles. I like to just view them from and I will show you the next slide is going to be much more apparent. When I show you the next slide, it's going to clear it all up. But the important part is understanding how these high wicks and low wicks are formed, right? Basically, what this is telling us is that the candle opened here, right? We opened over here. We went as high as here, right? Buyers pushed us all the way up, and then we came all the way back down, pushed a new low, but then somehow buyers came in and closed us up over here, right? That's all it's telling us. It's telling us a story within this candle. And the most important parts about this candle is understanding a couple of things. One, the close price, sorry, the open price, and the close price. Those are the two most important things because that is real action. The opening price and the closing price. Those are the two most important parts of a candle. Now, the second most important parts of the candle are the wicks. You can call them shadows, you can call them tails, or you can call them wicks. The same thing. I call them wicks. If you have very aggressive wicks, right, that means usually it's indicative of reversal, right? And I'm going to show you that in the next slide. You're going to see, but the important part is understanding where the open, where the close is, and where these upper and lower bound wicks are. This next slide, even though it's a little bit blurry here, you don't really need to understand the words. Just understand what I'm about to show you. So remember, I showed you guys in the first slide, I showed you this, that this doesn't matter at all. Why does this not matter? Why would I sit here and tell you guys this doesn't matter? It doesn't matter to me personally because how I trade is I look at the candles themselves based upon this diagram. So this is the only diagram, in my opinion, that matters to me as a trader when it comes to candlestick analysis. The only one that matters to me. Now we split this up into a few different components. Component one is going to be over here. These are going to be your reversal candles, right? So this is going to be over here. I'm going to write out, this is going to be your reversal candles over here in the top right. Reversal candles. Hopefully you guys can all see that. Can you guys all see my text that I'm writing? You put a yes in the chat if you can see it. You guys can see it? Make it white. Let's see. Yeah, I can make it white. That's a good idea. Better now? Yeah, there you go. A bit better. Reversal candles. So those are reversal candles. That's the first component. The second component is going to be your indecision candles, right? These are your indecision candles over here. These are indecision candles. These are candles that simply just don't matter, right? They're indecision candles. There is no aggression in either direction. And we'll talk about this in more detail, but these are your indecision candles. Let me write that out as well. I'm just going to say indecision candles. And thankfully, it turned right back to the blue. Okay, there you go. Right back to white. Awesome. So indecision candles, reversal candles, indecision candles. And then over here, we have our continuation candles. These are the most aggressive of the bunch. These are your continuation candles. And what we're going to do is we're going to write out continuation candles. And if I spelled anything wrong, that's okay. You guys get the point, right? Continuation candles, indecision candles, and reversal candles. So what do I mean by this? These are your pin bars, right? These are your pin bars. And what does that mean? Well, what happens here is that the stock opened over here. It made a high, right? It pushed all the way higher, but then closed over here. Now, at first glance, this is a green candle. But is this a bullish candle? It is not. It is not a bullish candle. Why is it not a bullish candle? It's not a bullish candle because the size of the wick, right? The size of the wick is larger than the body itself. And that itself makes this a particularly weak candle. So let's add context to this for a second. If this were a stock that were trending higher, right? Trending higher, trending higher, trending higher, and we approached a major resistance, and we formed a reversal candle just like this, right over here in the top, that would be indicative of a reversal, right? A reversal back to the downside, right? A continuation, and then we get a reversal candle form off a key supply, off a key resistance. This is going to be indicative of reversal, even though this is like, it sounds so basic, right? That you see this seems super basic, right? Seeing, okay, yeah, wow, a bearish pin bar candle is bearish. Wow, that's crazy. It's not crazy. I know it's not crazy, but people often put emphasis on the color of the candle, even though the color of the candle is meaningless, right? Is meaningless because let's just say, for example, that the pin bar looked like this, right? It looked like this. Well, what does this mean? This means that it opened over here, went as high as here, and closed over here. The distance between the open and close is so tightly bound together, right? And the length of that wick, right? The length of that reversal back to the downside is so much greater than the body, where it doesn't matter that this candle is green. It's the fact that it formed that bearish pin bar, particularly off of key resistance, that's going to tell me this is a bearish candle. So it says least bullish over here, but that's not even true. To me, that just means bearish, right? If I see a candle like this form into a key supply, that means bearish. Likewise, this, right? The same thing over here. this is a red candle. And oftentimes we associate red candles with being bearish, right? Just like a green candle being bullish. But it is not necessarily the case, right? So just say, for example, you have a stock that is making new lows and it's very, very weak. But then all of a sudden, we have big demand zone. Let's say this is a big demand on Amazon. And then next thing you know, we start forming multiple pin bars like this, multiple pin bars. Yes, we're making a new low, right? But we're forming these wicks where buyers are clearly starting to wick us back up and showing a little bit of strength. In my opinion, these are reversal candles. These are bullish candles. It doesn't matter the color. And you're going to learn something. I've met several traders who are very, very successful, and they have been successful ever since they changed the color of the candles from green red to gray or blue. Now, I personally don't do this. I like seeing the colors of my candles, but it's important that you guys don't put too much emphasis on the color. It's the closure that matters, right? The closure is what matters, not the color. Um, your second, so this is your first category, category one. Category two candles are your indecision candles. These are your sort of consolidation candles, meaning it could go up, it could go down. The percent chance of it going up or down is about 50-50. It depends on the overall trend, right? So let's just say if I were to see a trend like this, right? Let's just say you have a very clear uptrend and then we form a couple of indecision candles. Well, the likelihood is we're probably going to continue higher, right? Because we already had that previous uptrend, right? That previous uptrend went up, so likely we continue. But these are not very bullish or very bearish candles. They're just neutral candles. They're absolutely neutral. And the closer the open and the close are over here, or the open and the close are over here, the more neutral it is, right? This is a little bit more bullish, right, than this one. The reason why is because obviously look at the size of the body. The size of the body is more green. Therefore, it is more likely of continuation. Now, how much more likely of continuation? Not significant, right? It's not a significantly bullish candle, but it's kind of like a medium bullish candle. This is just pure indecision. Pure indecision. This still, in my opinion, would also be indecision, but it is a little bit sort of edging on more of the side of more bullish or more bearish, right? But again, this is the second category. It is just pure indecision. In your third category, these are the candles that we love to see. These are our continuation candles, especially if you're a momentum trader, you're a trend trader. These are your continuation candles, right? These are the candles that we love to see. Now, obviously, the most bullish candle is going to be a candle where we see a push up, right? And there are no sellers, right? No sellers come in the market, right? We just push all the way up and we close over here. So we open over here and close over here. And the most bearish candle is going to be we open over here and close over there. Why is it most bearish? Because there are no buyers coming in to wick this back up, right? Whereas, like, compare this candle to this candle, right? What happened? This time we opened over here, same thing, opened over here, but we pulled back down, and then buyers came all the way in and pushed us up over here, right? That's technically bullish. Look at the size of the wick. The size of the wick is much larger than the body. Whereas in this case, you see that there's no buyers present at all in this candle, and therefore it is likely of continuation to the downside. You guys can see my drawings, right? Can everybody see my drawings? Hopefully, I should have asked that before. I mean, I hope everybody can see it. Can you guys see it? Okay, cool. All right. I did ask that before, but I just want to make sure it is visual because people probably think I'm crazy. So continuation candles. Most green candle, obviously, this is fully bullish, fully bearish. Now over here, we have also, right, also a little bit of a presence of a wick. Now, why are these bullish and bearish candles? Context matters, right? In this case, we see that the stock opened over here, and initially this was a red candle. It looked particularly bearish. And then all of a sudden it closed up over here, showing that buyers came in, showing that buyers overtook and change the sentiment from red to green. And that is what's important here, is that sentiment shift between pushing new lows and closing above that opening price. That is bullish because of that sentiment shift between buyers and sellers. It started off weak, but then buyers came in and pushed it back up into pushing new highs. And that is what's more important, right? Now, what's stronger? What's more bullish here, right? What's more bullish here, this candle or this candle? Well, they're kind of equally bullish, but technically this would be more bullish, right? Obviously, why would it be more bullish? Because this pushed a new high and closed green. This did not push a new high and closed red. This is still bullish though. I still like, this is why when I say I like to see the colors of candles, this is why I like to see the color of candles, right? Because this you should know is more bullish than this one just based upon the color, right? Even though the colors shouldn't matter too much, it's the fact that this pushed a new high and this, although it was bullish, didn't push that new high, right? So important to note, that's kind of why I keep the colors in my charts, so I can see those type of things. Okay. Does everybody have an understanding of what I mean by bullish and bearish candles based upon what we just talked about here? Does everyone have a good understanding of what I consider to be bullish and what I consider to be bearish based upon the last 10 minutes? Make sense? Yes, but what time frame? Good question. Any time frame. This could be in any time frame. It could be on the 5 minute, it could be in the 15 minute, it could be in the hourly, the 4 hour, or the daily. I use this more often on the 5 minute time frame because that's where I monitor price action the most for day trades. But it could be in any time frame. It could be in any one possible, and it just depends on the strategy you trade, the system you trade. But let's move on. So this is the last slide I want to show you guys before I start going through some examples, because this is the type of stuff you guys probably have already seen. You guys have seen this already. I'm sure 90% of you guys have. Nothing here that I just explained in the last 20 minutes has been groundbreaking, right? Nothing's groundbreaking yet. Now we're going to get into more of the groundbreaking stuff. It's not going to be that groundbreaking, but this is the more new stuff where I'm going to go over some interesting stuff, and then I'm going to go over some real analysis of charts. And I think that would be more beneficial for a lot of the pro traders. So it started off very basic, but now we're going to go into more advanced stuff. So important notes about candlestick analysis. The first thing, probably weird to say this, analysis isn't the word here, but then we're saying stop overanalyzing. Candlesticks just represent data over a period of time. Focus should be on the candlesticks as they approach or at these key levels, not in between key levels. What does that mean? Oftentimes, we start to focus on candlesticks too much, and candlesticks are most important at these key levels, right? So if you have a key level here and a key level here, and you find yourself that you're analyzing price action over here, right, in the middle between these two big zones, it shouldn't be important, right? What's important is the price action at these key levels or as we're approaching these key levels, right? Let's just say we're approaching this key level and we see that price action is starting to slow down. We're seeing maybe some of those bearish pin bars are wicking in, right? Then we'll start watching price action, right, as we're approaching that key level. But we're not going to watch it. We're not going to watch it right in the middle range between those key levels, right? That's not what's important. It's important at those key levels. Okay. Candlestick combinations are not real, at least from what I've tested. You guys have probably seen it before, where you see like the white knights, those like weird terminologies for candlesticks. In my opinion, they don't really work well. It's not something that has paired well for my trading strategy. The third component is reinforcing your candlestick analysis with volume analysis. So, excuse me. So we've done a candlestick analysis class before. No, we haven't done a candlestick analysis. We've done a volume analysis class before. I recommend you pairing what we learned from the volume analysis class with what we learned today, because that's going to make you like a full depth trader, right? You combine both of those things and you're going to be a killer trader. So reinforce what I'm explaining here into the volume analysis class, and that's like everything you need to know about price action analysis, or most everything. And the last component is don't chase bullish candles. So you may see those most bullish candles, but if you see a candle like this, right? If you see the most bullish candle is saying, oh yeah, we're going higher. Brett said that if a candle like this prints, we're going to go higher. Does that mean we can buy calls? No, we have to wait for a pullback over that key level, right? That's the most important thing, is waiting for that pullback as we clear those key levels. Okay, what I want to do now is I want to go over our chart reviews, right? So I want to go over our live chart reviews. So is everybody ready? So we're going to kind of any last minute questions before I dive into this. You type in the chat before I jump in. Okay, what if the wick is very short for those pin bars? The shorter the wick, right? The shorter the wick, the less likely a reversal, right? Again, these are like your optimal case examples, right? Right. These are your optimal case examples. What do I mean by that? This is like your reversal candle, right? But what if a candle forms like this, right? What if a candle is like this? What does this mean? Well, let me make it a bit better here. What does this mean? If it's like this, wick, and the body's like that. Well, in my opinion, it's a neutral candle, right? The wick is pretty much almost the same size of the body, or a little bit smaller. This is still be a little bit bullish, but the dynamic between bullish and bearish is basically the is basically the ratio between the wick and the body, if that makes sense, right? So if you see this, this is a normal bullish candle. The reason why is because the body is slightly larger than the wicks, but in this case, it's completely neutral because there really is no buying pressure or selling pressure. It's just exactly the same, right? It's just in the midpoint. So these are your like ideal case scenarios, but everything can be viewed with just having this chart in front of you, because you know that if a candlestick looks maybe like this, right, looks like this, you still know that this is still, it's not a beautiful bull, it's not a beautiful pin bar, but that still is showing what? It's showing some sign of buying pressure over here, right? That's showing some sign of buyers stepping in that area, right? Wicking it back higher. So everything can be viewed in the eyes of this chart, in my opinion. Okay. Um, any other last minute questions? What would you be thinking if the next candle was okay, Jared, we're going to go over that. So let's go over that. Let's go over that in more detail. So I want to go over this chart first. And can everybody see right now the trading view chart that's in front of me? It looks like it should be like a video. Can everybody see it? Okay. This was a trade on Amazon that we had taken as a team on Voice. I believe it was me and Felony took this trade. I don't want to say it yet, but I'll say it as we approach. But let's watch this. So this is about a 12-minute video. We're not going to watch all 12 minutes. I'm going to skip it forward very quickly, but this is going to be a longer video, and the next one's going to be a little bit shorter. But I want to spend time reading the analysis here and seeing what I see. So let's start off and make sure the audio is not playing. Yeah, it's not. Okay. So what I'm watching here on Amazon, just to start this off, is I'm watching for calls above this level. I'm watching for a breakout above these highs. Reason why is because we have a typical a trend up consolidation, right? So it would look like this on the hourly time frame. It looked like this. It was a big move up and then consolidation. So what I'm going to look for is a clear above that consolidation for a move higher, right? And that was this move you're seeing over here is part of that consolidation. So I'm looking for a move above 133.15 for a move higher back into 134.50. That's what's happening here on Amazon. So let's play this chart and we'll watch what happens here. All right, you can start to see initial signs of strength, right? You can see we came into support and we formed some weird candles, right? You can see that the tails here were quite large, which I don't like, and I would not be buying calls here. I certainly would not be a buyer of calls. The reason why is because look at this aggressive move down, and you see these high tails are coming in. So I wouldn't be buying calls there. I wouldn't get an early entry. The only thing I look for is to look for that break above 133.15. Now, I actually was watching for a bounce here too, but I didn't take that bounce because you can see, look at the selling volume coming in and look at those wicks on those upper tails, right? Not particularly bullish for me. So I'm going to let that go. I'm going to wait for that break above 133.15. So let's continue watching and let's play as this continues. So I'm starting to see strength, right? You can see this is the definition of strength. You see your initial pin bar over here. You see a nice, strong, full body candle starting to form. It hasn't fully formed, but it's starting to form. So I like what I'm seeing, but obviously I'm not in the trade yet. Let's continue watching and we'll get a view. Okay, now this is the start of the break, right? So we're starting to see Amazon clear over these highs, but it still hasn't closed yet. So I'm just going to watch and wait. This is the breakout candle. And let's see how this candle forms. So watching and waiting. Okay, there you go. One step back, one step back right there. Now, I want you guys to look at this chart for a second. And remember, the patterns don't matter. What matters are is two things, right? How we approach the breakout, right? The strength of the breakout, right? You can see the strength of the breakout. And then what also matters is the closure of that breakout. Remember we said when we walk into the Kia dealership, right? What matters is the first 30 seconds, right? Of the interaction. Same thing goes with charts, right? The first candle closure is going to tell you almost everything you need to know about that particular setup. So seeing this candle closure is a candle closure of this nature. I don't want to give you guys what it is here. A candle closure of this nature. What does this tell us, right? Is this a continuation candle or is this a reversal candle back to ground zero, right? What does this look like to you guys? Type in the chat what you guys think. What does it look like? Is this a continuation candle or a reversal candle? What do you guys think? Continuation or reversal, right? Continuation. Exactly. That's exactly right. My mindset was continuation. It didn't close high. It did close high. Let's look at it for this example, right? Look at the relationship between the wick and the hot at the top and the body itself. This to me is technically a full body candle closure over a key level. Not everything's gonna be perfect, right? We're not gonna have always the exact full body, right? It's not always the exact full body, but this is pretty damn close to a full body candle closure. In my mind, this means continuation back to the next level of resistance. So I'm liking this. For a continuation standpoint. Now, going back to what I said before, does this mean I can come in here and buy calls right off the get go? And yeah, we're going right to the moon. No, right? I have to wait for that pullback and continuation higher. But this is where it becomes interesting, right? I don't oftentimes when I'm taking break and retest, if I see a beautiful candle closure like this, I'm gonna get in on the first sign of that pullback. As soon as this red candle starts to form, you're gonna see that I got in, right? And I'm gonna add more, and I'm gonna add more as we're approaching. And all I'm gonna do is keep a stop loss under that breakout candle low, right? That's all I'm gonna do. This is how I'm gonna trade this setup. And then what I'm gonna do, even before I do any of this over here, right? That little analysis over there, I'm going to look at the volume. For those that attended the volume analysis class that we had about 2 months ago, what is this volume telling us? What is the volume telling us over this key level? Is it telling us continuation or reversal? For those that came to the volume analysis class, it's strong, right? It's strong. We don't have to be a genius here to say this is strong, right? This is a strong stock. So how do we execute this now? What we're going to do is we're going to look for a pullback and we're going to buy and look for a continuation higher, right? It's all we're going to do here. We're going to set our stop loss over here. We're going to set our take profit over here, and we're going to look for that continuation higher. Now, I may look for trims over here, right? If I get in a pullback, I may look for trims over there. But let's now watch and see what ended up happening. Were we right about this continuation, or were we wrong about this continuation play? You're going to see here that as soon as it started to tick red, I get in my calls. So this little arrow is me getting in calls. That's made my broker filling calls. I get my position, and I'm actually adding into this a little bit. And then now what I'm going to watch here, and this is where the difference between a good trader and a bad trader is what's going to happen right now, right? A lot of people, a lot of bad traders, not bad traders, a lot of developing traders would see a candle like this, and they get scared now, right? They're going to get really, really scared. They're going to say, wow, this is, we just gave back that whole green candle. Is this just a break and failure? Well, it may, right? It may break and fail. But where does this change? It changes if we lose this level over here. That breakout candle low, if we lose that, then yeah, I think maybe it's time to get out of my calls. But I'm happy as long as you hold above this level because we have that strong previous candle, right? That's all that matters here. What I would love to see here is I would love to see this candle turn into a bullish pin bar. That's what I would love to see. So let's watch and wait, and let's see what happens as this stock approaches my retest level. Okay, and what do you know? We form, not really a beautiful bullish pin bar, but it is still technically a pin bar, right? It's not beautiful, right? It's not that picture perfect one that we've seen over here, right? But it is showing us that buyers are stepping up, right? It's not a particularly bullish candle, but it is showing us that buyers are there in that candle. And that is what I like to see. This candle Now that is screaming continuation, right? That is screaming continuation. Nice little wick again, and then push of highs. This is likely going to go. The reason why is because we now have a little bit of a pin bar. We have a continuation candle breaking highs. We're going to go higher, right? Why do we say that? The reason why is because we have cleared this resistance. We've wicked off of it. We've held that support. We formed a little bullish pin bar. And we have now a bullish candle clearing those highs, confirming that this is a 1, 2, 3 play, right? Or A, B, C play, right? That is absolutely beautiful in my book. And that is why you see here, we get a beautiful continuation back into highs, back into our resistance. And this is where I'm taking profit. The reason why I'm taking profit here is because that is the next area of resistance. Now, I want you guys to look at this candle. And let's just say, right, the stock closed right here, right? It closed right over here. And that's what it did. Is this now telling us, you guys already know the answer to this, right? You see the stock close over here. This is telling me, right? Get the hell out of your position, right? Nobody needs to tell me to get out of this position besides the chart itself. It's telling me get out of that trade. Why is it telling me that? It's forming a bearish pin bar reversal off of my key support or key resistance. I know that I have to be out of my position. What I could do at this point, right? What I could do at this point is maybe keep a stop loss above these highs. So if we lose this level, I'm going to get out, right? Because it's likely going to go back to zero, right? And I don't want to be a part of that. So let's watch and see what happens now. I already took majority profit over here. Let's see what happens off this level. Do we hold it or do we fail it? And you're going to see very quickly that we that we do fail it. We do push lower, right? We do push lower right back into our support. Now we're back into our support now. So you would say, well, can we buy calls here? Well, in my opinion, I wouldn't buy calls here. And the reason why I wouldn't buy calls here is because, right, we have that wick reversal and we have a high volume sell off of that wick. And to me, I'm not loving this for another entry back into highs. It did end up working though. This trade did end up working on a reentry, and it worked on the reentry because what ended up happening was that we formed a, let's see here, you're gonna see in a second. We formed a bullish pin bar again off the key support. So at this point, we have one thing telling us we're going to go lower off our key resistance and one thing telling us we're going to go higher off our key support. This is a coin flip right now. This is a complete coin flip. Nobody in the right mind can tell you where this is going to go. Now, it is more sided with bulls right now because we're holding that key support and we're wicking right off of it, right? So we do have better risk reward for longs here because we're right off that support, but it still is not, it's not giving us too many signs of I want to buy into this, right? I'm not loving it. I do think it's going to go because we have a nice little pin bar here, and it's probably likely we test highs before going lower, but it's not something that I really dig and really like. The reason why is because we have that upper pin bar over here that was off that key resistance, right? And it's showing us, right? It's telling us a story of a potential reversal, right? So you're going to see here, it ends up going back into highs, right? Pushes right back into highs. And at this point, I did re-enter. I was guilty of re-entering. So I did re-enter here again for calls. And then you can see I sold right back into that level because I wanted to get the hell out of my trade. Let's continue playing on with this and see what happens here. So you can see we chop around a little bit off these highs. And you can see, what's happening here, right? What's happening here again off this resistance is reforming, again, two weak candles off of that key resistance, showing us that we don't really have a lot of strength. There's not a whole lot of buyers left in the tank. And then you're going to see a very, very important pivot get tested in a few minutes. So you're going to see again, okay, what the heck's happening here? Right there, okay. Again, we pull back down. We test those highs one more time, super, super weak test. And then what happens is we then do something very interesting, right? And I want you guys to answer this question. We took our breakout, we got out of calls, we're happy campers, we're no longer interested in this trade anymore. But let's just say we go back and we look at this chart again. We just lost and closed right under a key support, right? We just closed right under a key support. Now, we haven't fully broken it yet, so still a little bit more needs to go before I would have high confidence in this. But is this a continuation candle or a reversal candle, in your opinion? What do you guys think? Is this a continuation candle to the downside, or is it a reversal candle back to the upside? Continuation downside or reversal upside? Continuation downside, 100%, right? Why is it continuation downside, right? Look at the volume stepping in, right? Volume stepping in, and we have a full body red candle, right? This is and it's closure under our key level, right? Not a full closure, but it is a closure, right? And you're going to see one more candle confirms that, right? This candle confirms the downside, right? After that bearish candle, this next red candle is going to confirm it, and you can see big push down. And if we break this support here, we're probably going down to this support here. And that's just the basic mechanics of stocks, right? Stocks like to trade between these levels. And that is why eventually you're going to see here at this point, if I see this happen, like especially like if I was uncertain about it here, I'm very certain now that at this point, this red candle here, this high volume red candle over here, I know that at this point, short any pop that you can possibly get in the stock. Any pop, I'm going to short for a move lower. As long as we are below this level, short the pops. The reason why, we have a bearish continuation signal with a break under a support. So all I'm going to do is I'm going to short those pops for a move lower back into the next level of support. And you can see, I think it eventually did. Yeah, it eventually did work out. Right? It wasn't beautiful, but it did work out. We come back into our support. And what do you know? What's happening in support here, right? We're forming bullish pin bars right in support. Now, this is not something I traded, right? This is not a trade I had taken, but this is showing us signs of reversal, right? This is not screaming reversal yet, but it is showing signs of reversal. And eventually you see here that we did pop up on the stock back into highs. And you can see that the analysis is really occurring, right? The analysis, the thought process is occurring at these key levels, right? And that is what matters. What matters is the analysis of the price action at these key levels. Winfrey, Joe, would that be a good point to go short? Here, absolutely. Good point to go short. Here, no, I wouldn't go short over here, right? That's me. I wouldn't go short there. But here, I would absolutely go short. And here, I would absolutely go long, right? This is what I look for, right? This is what a professional trader will look for in terms of reading price action analysis. A lot of people are asking questions, and I see them. But remember, this class is just on price action, and I'm way over. I was supposed to be done by 10 o'clock, so I have to go a little bit faster. I think I'm only gonna have to go. I think I'll only be able to go through one more video with you guys, unfortunately, because it's already so late. But this is the next video I want to go over. Are you guys ready? You guys ready? Okay. Everybody's learning stuff so far. Everyone's learning something. At least they've learned something so far. All right, beautiful. Okay. All right. So this was another trade we had taken together on Voice. This was, I can't remember when this trade was, to be honest with you. I can't remember where we traded this, but I'm going to find out with you because we're going to see my executions here. So let's watch this together. All I see right now is we have a big resistance here. We have a nice support over here at 134.50. What I can see in my head right now is I'm probably looking for longs off this 134.5, or I'm looking for that break and retest above these highs. That's all I would look for at this point, is either pullback to 134.5 or that break and clear over 136 for a continuation higher. That's what I see right now on the chart. Let's see what happens here. Let's read price action as this approaches. So I do see a strong push. I see a nice full body candle. I see a nice big break over 134.5. At this point, I would more than likely be waiting for that pullback for a call entry. But let's see what happens here on this chart. Okay, we see the first sign of it, and this is a perfect pinpoint example of what an indecision candle looks like, right? We have an indecision candle right at resistance. This matters, right? We're right at resistance. We see an indecision candle. This is a 50-50 up or down, but given the fact that we are approaching a resistance level, it's more likely we go down here, right? Now, it's not bearish if we go down. It's more than likely me just looking for a long play to the upside off the support. And the reason why, because that is a major level to go, a major support zone. So let's continue watching, and let's see where my actual execution is. So we see that pullback, not a very weak level, not a weak pullback yet, but okay, there it is, right there. I'm getting longs, right? Why am I getting longs there? This is technically, right? You would see this candle, you see this as a full body red candle. Why the heck would I be buying calls into a full body red candle? I just told you guys red candles are bearish, right? Full body red candles are bearish. Yes, it is bearish, right? But remember, context matters. Remember that first video I showed you guys, that full body red candle under a key support. That was bearish because it was right under a key support. But given the fact that this is only a full body red candle, but it's still above that key support, it's still to me not bearish, right? I see it, right? Trust me, I see it, but it's because this stock is still above that key support, which makes me feel more comfortable holding calls. Now, granted, if this candle happened over here, right, and was like that, then that's screaming downward continuation, right? That's screaming it, right? But given the fact that it hasn't, it's still above that key support. I'm okay going long off at 134.5 because we had that strong breakout over here, strong breakout followed by pullback. That's the name of the game. I'm happy with it. I'm going to look for continuation play here. So let's watch and wait. Again, calls off 134.5. And you're going to see that this gets a little funky here. Watch this chart for a second because you're going to see. I remember I was down. I think at this point, I think I took almost took a losing trade here, but I ended up holding. And the reason why was because you're going to see, right? We formed a red candle, right? And we're right at my support. And my last level of support is right over here. My stop loss is right over there. My entry is right over here. So I'm down a little bit right now on this red candle, but I'm going to wait for the closure here. And I want you guys to watch the closures of the next two preceding candles. So watch the closures here very closely. So right now we're in my support zone. We're breaking right through it, which I don't like at all, right? My fingers on the trigger. I'm seeing, full body red candle, a pin bar, and a break under my level. This is not looking good for me, right? This is not looking good for me. We're in support, but it's looking not good. So let's watch and wait. Let's see how the next couple candles progress. And you're going to see what ended up happening here, which made me want to hold this position even more. So you're going to see, okay, a little bit of a wick forming over here, right? A little bit of a wick forming over here off my key support. I like that. Not loving it yet. And then this candle, this is where I really started to love the trade. I started loving the trade because we now formed a pin bar right off my key support, reclaiming my key level. I love that, right? I love seeing a stock break and reclaim my key level. This is now a very, assuming it closes here, because it has to close here, this is a very strong continuation, very strong signal for a long continuation back into highs. So let's watch and wait. Let's see how this candle closes. And you're going to see, I believe it does close strong. It does close strong. And what do you know? What do I do here? I am actually adding here, right? You see that second green arrow? That second green arrow means I just added to this position. I added calls here. And the reason why I did that is because what's happening, right? What's happening here? What's happening here is that I'm not panicking because I'm seeing a couple red candles. We're a couple red candles into my support zone. We're forming a couple of pin bars off my level. I'm fine, right? I'm fine. I'm cool. I'm chilling, right? Now, what do? My stop loss was here before. Hell no, my stop loss is not there anymore. It's now here. I'm going to use the lows of these candles as my stop loss. As long as you hold that 134, I'm cool. So that's my new stop loss. I'm going to look for a take profit back in the highs, and that's it, right? That's the whole trade here. So let's watch and wait. Let's see what happens. But what do you guys think now? Do you guys agree with me? Does this look like continuation? Do you guys think that this continue? Sorry, I'm not gonna. Does this look like reversal? Because this would be technically a reversal trade, right? Does this reverse back to highs? I think it does, right? We have two beautiful pin bars, maybe even three beautiful pin bars off support. Hell yeah, right? This looks good. And it also probably stopped a lot of people out over here too, which is beautiful. So now they're gonna get stopped out. It's gonna go back to highs. Let's see what happens here. Okay, you can see beautiful right back into my level, and all I'm going to do is sell back into those highs, and that's the entire trade, right? You can see what happens. We're right back in resistance. We start to fizzle out into that resistance because you can see there's not a lot of buyers, not a lot of strength in the market. I do remember what happened here was we came into this level and we fizzled out, went right back to lows, right? The reason why we fizzled out was because we didn't have a lot of buyers. You can see that there was literally no strength over here, right, in this key resistance. And that was why we ended up fizzling back down to support. But this is what I look for, right? I know I didn't go through as many examples as I wanted to, but I do hope that you guys got something from the last 50 minutes of this lesson. We went through everything I think you guys needed about candlestick analysis, and went through two awesome examples, which I think were really, really good stuff. So hopefully you guys learned something there. If you guys did, let me know in the chat. I'm gonna do a little recording. If you guys enjoyed today's session or learned something, put a little I don't know, a little yes in the chat or something like that. It'd be awesome. If you guys post this on Instagram. Beautiful. There we go. Very nice. Well, what I'm gonna do is this, because it's already 10:30, and at this point, I don't think anybody's mind is grasping anything additional that I say. If you guys have questions on this, don't put it in the chat here. I want you guys to put it in the stocks only chat. I probably won't get to tonight because I'm gonna go to sleep after this. But come Saturday morning tomorrow, I'll review some of what you guys post in that stocks only tab. If you guys have questions on anything price action analysis, charting,